as uncertainties linger regarding Chinese currency devaluation and US inflation, we're going to see increased demand for gold.
So Dooley, so far this year we have seen global growth faltering, but despite that, gold has fared exceptionally well. So can you talk us through the changing gold prices in 2016 so far?
Well, gold has gone up about 20% so far this year, Jessica. So we started the year, I think, about $1,060 an ounce, or about $1,280 an ounce at the moment. So it's fared exceptionally well. It's important to note that other commodities have also rebounded during that period. Oil has been up 40% over the past month. So it's not alone in rebounding. Stock markets have been rebounding, but gold has fared exceptionally well with a 20% price development year to date.
And around this time, we've also seen a buying spree from central banks regarding gold. So what central banks are we seeing that are investing into gold at the moment?
Well, at the moment, it's mainly Russia and China. Russia has been the main buyer, buying about 200 tons of gold over the past year. Those are the two main central banks. It's important to note as well, when you talk about central bank buying, that although central banks do want to buy gold to diversify from other currencies and from other asset classes, it all depends on the percentage of foreign reserves that they hold in gold. So China, although it has bought about 600 tons over the past 4 or 5 years, and holds about 1,800 tons in foreign reserves, those 1,800 tons still only represent about 2% of China's foreign reserves, whereas other countries like the US, Germany, Italy, and France hold far above 60% of their reserves in gold. So it's a rebalancing, basically. It's not exceptional.
And some strategists are extremely optimistic on the future price of gold, with some saying around $1,350 per ounce this year. What's your take on this? Where do you see gold falling this year?
I think we could see more than that. I'm hoping to see at least 1,400, maybe even 1,500 by the end of the year. I think as we see that we have good figures coming out of the US, so we expect inflation to start picking up in the US, and at some point gold is always a good hedge against inflation. On the other hand, we also see that the Chinese have pressure to devalue their currency, and a lot of the gold demand this year has come from Chinese consumers who are investing in gold and in bars and coins in order to avoid, basically as a hedge towards their currency devaluation. So as uncertainties linger regarding Chinese currency devaluation and US inflation, we're going to see increased demand for gold. So I'm hoping to see an even greater move than 1,350.
Wow, okay. And also, gold is known to be the safe haven commodity, so there's uncertainty around the markets in 2016. Would you say gold is going to be the best performing commodity in 2016?
That's difficult to say. As I said, oil has already outperformed gold 2 to 1 over the year to date, so it's difficult to say. The good thing about gold is that we're coming off, the high we've seen at gold was about 1,920 per ounce. So we're still about 35% over the all-time highs that we saw in gold, which were, I believe, towards the end of 2011. So we still have quite a way to retrace in order to reach those all-time highs again. And hopefully we'll see gold heading back in that direction. On the other hand, there are other commodities such as oil, which are also, greater than 60–70% of their all-time highs. So it all depends. There might be other commodities which were harder hit, particularly oil, let's say. And I expect to see gold perform better than other precious metals such as silver, palladium, or platinum, because those are all linked to their industrial usages. But I'm not sure if it will perform better than oil this year to date. Okay. So that's something to bear in mind.
Great. Well, Dooley, thank you so much for coming in today and sharing your insights with us. Thank
you very much, Jessica.
Well, that's all from myself and Dooley, but for all the latest Jukascopy updates and exclusive interviews, do keep clicking back. Goodbye for now.